Look, most people don't understand this simple fact, is you are getting poorer by investing in these things. And that was the big realization that got to me. It's like, oh my God, my whole macro world has been turned upside down. Because everything we thought was the investable asset became the non-investable asset. And everything we thought was non-investable because it was riskier became the asset.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses the crypto and Bitcoin. According to Raoul Pal, we must focus on rebuilding our balance sheets, ensuring they are strong and robust. Refinancing in the 3 to 5 year sector has led to a perfect cycle, creating a positive trend. Understanding the residential cycle is crucial. The Bitcoin halving cycle is a crucial code cycle that greatly influences various aspects of the market. One of the reasons for my success in accurately predicting market trends is due to my deep understanding of the liquidity cycle. Understanding the debasement cycle is crucial, as it has a significant impact on driving assets. Once you grasp this concept, you'll have a solid understanding of the majority of the financial landscape. The upcoming challenge is not unfamiliar. Similar situations have occurred in the past, particularly in the 1950s. Strikingly similar this time around, it wasn't a demographic bust that led to it, and the debts that arose due to demographics in the past were primarily a result of World War II.
All of the major central banks around the world agreed to forego interest payments. That's what zero rates are. So they said we don't need to pay interest payments because we need to rebuild our balance sheets. So they rebalance sheets by refinancing in the 3 to 5 year sector, and that's created this perfect cycle. This cycle, which is the presidential cycle, the Bitcoin halving cycle, it is the everything code cycle. And that cycle drives everything. It's why I've been able to do so well in predicting where markets are going, because that cycle is the liquidity cycle, the debasement cycle. It's all one thing, and it drives assets. Once you understand that, you understand most of the game that lies ahead. Now, this is not the first time this has happened either. The 1950s were remarkably similar. This time around, it wasn't a demographic bust that caused it and the debts that came because of demographics. The last time around, it actually came from, obviously, World War II and those debts. But what did the governments do? In the US, they imposed yield curve control, which is financial repression, which is the same as adding things to the balance sheet. So they kept interest payments low. The economy, they restructured debts. The economy became perfectly cyclical, just as it is now. It's almost identical. And asset prices correlated entirely. So they ripped higher, corrected every cycle, as they're doing now. So that whole 1950s thing actually plays out perfectly in the equity market. When I look at the chart of now versus the 1950s, it looks very similar. And when I zoom out, it kind of suggests what's going ahead. You see, in the 1950s, their piece of magic was to keep financial repression going, keep the cycle going until productivity increased. And eventually productivity increased, financial repression helped to wear down the debts. And over time, the economy took off and we had the 50s and the 60s and then into the 70s. And that was a magic period for GDP growth because of what they did. And they're repeating it now. It's very clear to me that that is the game. That is the game the Japanese are playing, the game the Europeans are playing. Everybody's playing the same game. So we know the game. We know debasement of currency is the other game. So here we know that if we don't play their game, you're going to get fucked. If you invest in assets that don't beat the balance sheets, the 15% a year, you're going to be losing money every year. So it's really important that that is your hurdle rate. And when you look at that, you suddenly realize that most assets don't beat it. The S&P doesn't really beat it. Gold certainly doesn't. Real estate unlevered doesn't. Most things don't beat that debasement. So if you invest in other things, you're going to lose money. And that's a hard lesson for people to learn. Most people don't understand this simple fact, is you are getting poorer by investing in these things. And that was the big realization that got to me. It's like, oh my God, my whole macro world has been turned upside down. Because everything we thought was the investable asset became the non-investable asset. And everything we thought was non-investable because it was riskier became the asset. Because when you look at everything versus the Fed balance sheet as a simple example, there's only two assets that have gone up. And I've talked about this at length before. It's technology and it's crypto. So those are the things that we have. So that's why I've become so passionate about them. And really, it's crypto because it kills technology investing too. Technology investing is basically a way of being engaged in the economy, and we'll talk a bit about what that means.
According to Raoul Pal, if you choose to invest in assets that fail to outperform the balance sheets, you will likely end up with a return of only 15% per year. It is crucial that your hurdle rate aligns with the fact that you have been experiencing financial losses consistently, and upon closer examination, it becomes apparent that the majority of assets fail to outperform it. The S&P doesn't really outperform it. Gold definitely doesn't outperform real estate, unlevered investments, or most other assets. Be cautious when investing in other areas, as there is a risk of losing your investment. Understanding the value of money can be a challenging lesson for many individuals. People often overlook the crucial aspect of understanding one's financial situation. I realized that my investments were causing me to lose money, which was a major wake-up call for me. The entire macro world has been completely upended, as everything we once believed has been challenged. The investable asset transformed into the non-investor, becoming the asset due to certain circumstances. When you consider everything in comparison to the Fed balance sheet as a simple example, there are only two assets that have experienced a change. Up and Raoul Pal have discussed this extensively before. It revolves around technology and cryptocurrency, which are the key elements we possess. Let's back to the Raoul Pal interview.
Understanding the changes around us. So it's kind of important to invest in it, but really the entire wealth is going to get made in one asset class. And I know a bunch of you can't stand it. I don't care. I'm trying to help you. And if you're not helping yourself, I just don't know what to do. I've gone on and on and on for over 10 years in Real Vision about this. Since I first started talking about Bitcoin, it's up 450,000%. Now, most people just still don't get why I care about this. It's because it's the only way I see to truly give yourself the opportunity. And this is, you can see this behavior of investing in risky things by the speculative economy that has taken hold that people can't understand. It makes total sense to me. If your future is fucked because you're young, you are going to do what you're supposed to do, buy your 401k, that kind of locks it in because it's not underperforming the balance sheet, it's not outperforming. So that's savings. Okay, I get that. And it's better than saving in cash. But everybody knows they can't get ahead. So people have become speculative. Speculative is okay if it's not at the casino. If it's in a secular trending market like crypto technology, go for it. Just do it in the right way. So we see the rise of not only tech investing on Robinhood, but option investing on tech in Robinhood. That's the way, the lottery ticket economy, where people just don't feel like they have a choice. There's no way for them to get the 100, 200, 300 grand that they need to get in the property ladder, or to feel like they've got the savings they need. So people are taking bets, but in a secular market, actually pretty intelligent risk taking, and options are pretty intelligent too. Over time, if you get it right, you have the right tools, you learn how to invest. It's one of the core things that we do at Real Vision is try and teach people how to do this. You can make money. Crypto has been even easier because the sheer magnitude of the moves means you just buy and hold it. You just own the highest quality assets and do nothing. I mean, doing nothing is really that easy. Has been basically giving you about 100% a year returns for the last 7 years, 8 years. It's actually higher if you go back earlier in Bitcoin's time. But if you basically look at that, you're going to get somewhere between 80 and 200% returns, depending where you are on the cycle over time. So these are the compounded returns. These aren't just, year in, because obviously some years you're like 500% returns and other times you'll make down 70%. People don't get their heads around, but this is actually the best risk-adjusted reward asset of all time. Fidelity have this beautiful chart of all of these dot plots of risk-adjusted rewards of assets, and there's like, tech is quite high, and some markets are high, and then cyclical stuff like oil and stuff is low risk-adjusted returns over time because it doesn't really do anything. All of this, S&P, all in this. And then you go and there's a blank paper, and somewhere right at the top is a dot that says Bitcoin. It's a fucking alien. We have never been given an asset like crypto that has this risk reward by any yardstick. Drawdown versus, drawdown risk, volatility adjusted, any way you want to look at this asset, as long as it's over a period of time, it's by far and away the best asset we've ever been given. It's also the best performing asset of all time and remains the best performing asset. Every 4 years of that everything code cycle, Crypto Spring, which was last year, best performing asset in the world. Crypto Summer this year will be the best performing asset in the world. Crypto Fall next year will be the best performing asset in the world. Crypto Winter, which is 2026, will be the worst performing asset in the world. It's kind of simple. You don't need to do anything. You just need to buy it and hold it. So once you understand that we're over indebted, GDP growth is going down, we have an aging population, productivity is declining, we have our wages aren't going up, what are you going to do about it? Now, there are ways I've talked about how you can manage your own life in terms of thinking about having an income. That's a really important thing. Multiple streams of income. We're all being forced into that these days. I get it.
According to Raoul Pal, people appear to be speculating in a market unaffected by religious or spiritual influences. This type of calculated risk-taking can be quite astute, and the utilization of options can also be quite astute over a period of time. Sure, you understand it correctly. You possess the necessary tools. Gain knowledge of the art of investing. At Real Bew, one of our main focuses is to constantly strive and learn how to generate income by leveraging the power of cryptocurrency. It's never been more accessible. Given the significant scale of the movements, the strategy involves purchasing and holding only the most valuable assets. Doing nothing may seem easy, but it doesn't necessarily benefit you. For the past 7 years and even earlier, the returns have been consistently high, reaching around 100% per year. If you take a closer look, you'll find that investing in Bitcoins can potentially yield returns ranging from 80% to 200%. Understanding the cycle over time is crucial to assessing your compounded returns. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.